Jump into this one. Let's kick one off on the pound dollar. I've just loaded up a random date. It's 2017 February. And again, I'll use a mixture of time frames because I think that's helping people understand a little bit about how they work. Of course, you need in-depth training for this. You need to understand how time frames really work and how the data displayed in front of you is relative in all different ways. Anyway, let's kick things off. I'm going to take something very lightly short because we're an awful long way down already. And I'm going to flick through and start the process of playing. Okay, so anything near these lows, really, I'm just going to kill off for gains and I'm going to add along. Market, obviously, at this point in time was subdued. It's a fair amount of time ago. I'm just going to take that for $217 there. I'll flick to the daily at the moment. And anything just under there where you've got that key support and key rejection, I'm going to look long. So I think I'm ready to fire now. I'm going to go for a 0.25. It's a bit heavier there. Okay, and we'll just keep playing through. Now you can see a range sort of forming. If I wanted to long-term swing trade, I could just hold, for the whole drift if we get it. But typically I won't do that. I normally close some out and look for some gains in between. Now the price is considerably low over the long term, like I said. So I do not want to short anything heavy because I'll have to deal with it massively later. And I just don't want to do that. So if we keep going higher, yes, the price is now at a key short zone, but the mistake a lot of traders make is exactly this. I mean, they will say, all right, well, we pushed up a fair bit. We're in this range. There's a 100% chance I'm going to be right. I know better than everyone else. There's no way we could break up here. No way. Even though we come down for years and years and years, like this, okay, 14, 15, etc. And, probably even before that, there you go. Do I really want to be shorting a lot? And the answer should be no. So I wouldn't be surprised if we get a bit higher. Okay, we didn't. So I'm going to take that one off for a gain. I'm going to take 0.15 long. And I'm going to play. And I'm out for gains on that. I'm going to add a light short now. And we're sitting fairly comfortably in a range. Hopefully we'll break and I'll be wrong. And then we can look at some hedging scenarios. Just kill that one off. I'm going to add another long. So just bear in mind, if the market's not trending massively, you should pick up a lot of gains. And you can use those gains, obviously, to mitigate any drawdown you've got when the market does trend against you. So now I can see a big push. This is nice and healthy. I'm going to add a 0.1. Okay, nice and healthy drop we might get. Okay, so now I'll need to enter the process of hedging these out. So because the dip isn't very big, I'm just going to take a 0.05. Anything back up higher, and I can lock it in for gains. I'll take it off. I think I want a bit more than that, and the price looks supported anyway, so I wouldn't be shocked if we keep going up. Right, there you go. So 70. So just understand this in your head, so you can sort of get how this works. Because obviously, like I said, and as you've seen on every single video I film, we're always ending it in net gains. If you look at these two, 215, 288, okay, it's about $500. If I take this gain of 75, I've almost got a fifth of it, a little bit under, okay, but I'm getting there. So if I take 75 off there, I can now add a 0.1 again. In fact, what I'll do is I'll look at my weekly first. Are we at key resistance? Well, I would say it's more resistive up there. And price is now pushing up quite aggressively. So I'm going to take something like a 0.07. Okay, and we'll just see what happens with that. And we hopefully will get hedged long. If we don't, I'll just short higher up again. But you can see my drawdown, although we've gone, 600 pips or so north, it's not threatening at all. And this $33 I take can count towards the extinguishing of that. So I could take a light long again on this dip. Okay. Again, it might not be loads, but it is helping to contribute to this. Remember, you'd be running a multi-asset portfolio. So if you're not interested in taking $20, $30 here and there, that's fine. You could be running a multiple asset portfolio. You could have higher sizes for $200, $300, if you've got the capital. It's very scalable, all of this. So I'm going to add a 0.07 there long, because it's a nice healthy dip. Now I could use the hedge gains accrued already to get rid of this if I wanted to. And I think I won't. I think I'm going to look to re-long if we can get down here, because it's a very supportive area. And at that point, I will extinguish some shorts with the gains that I've taken already. So I've got another $82 there. Great. I'll short 0.07 there in case. Doesn't look like we're going to get a drop. Oh, no, we're fine. So I take that one off $142. And now I can easily extinguish this. Okay, so I've effectively hedged these out because the gains I've taken, long and short, more than pay for it. Now, because we're starting to see a bit more of a bullish stance on the longer term and a dip back to these key MAs, I can be a bit more aggressive with these longs that I take. So I'm going to actually add a bit more than I initially did, and a nice reaction would help us. So I've got a little bit there, okay, I'm going to leave that running. So I'll take that again, and now I'm going to hedge this former entry I had. Okay, and I can kill it off for gains, and I'll add another light long, and another 2 light longs. Skipped a candle there. And I probably won't add anything unless we can get right back at the lows. But at this point, you'll notice instead of swing trading weekly, I'm taking a lot of trades on the daily. Okay, so a lot of these videos, it's absolutely with ease. And I could be doing that on the weekly. But just to give you a few more trading entries to look at, okay, this is what we got. So I'll take that one. So now I'm not quite scalping. It looks like I am because I'm back testing and every trade takes a couple of minutes. But I'm just getting you the general idea of how it doesn't matter what happens, really. I mean, we've drifted from the lows, 121, to about almost 131. So a range of about 1,000 pips is generally what you're going to get anyway. You don't normally get massive stretches on things like this without any serious kickback. So I'm going to take that one off. Very light hedge just to cover a bit of this former short I've got in play for 0.05. Going to add a little bit more again. And add 2 more. So I'm just adding lots of light positions as we fall. Take gains there. Okay, now I'm going to step it up a bit to 0.1 short. And the market is climbing, but as it climbs, I'm getting paid as well. So don't mind that at all. Take that off for gains. These longs I've got in the background have minor gains attached. And again, now I'm in a situation where I might have to start to look at how I can hedge out of these shorts I'm now wrong on. So I'll start doing that again. And you can see the other angle of this. Remember at the start I said now you've accrued gains, you can use them. So I'm going to take a couple more there. Bit of a drop is going to give me something on the short. $32. Now I've not got a terrible amount of long exposure, but we are looking like we might continue to uptrend. At this point, I can close that one out for a loss using the gains I've taken. And hopefully if we continue uptrending, I'll get some more, which we didn't. So I'm just going to add something like a 0.1. And now on a push, I could probably close it all out. And we've traded 1,000 pip range quite easily. Just going to check how much I've got in exposure. 4, 4, 12, 16, 26. And the distance of that is 131 to 128. So I'd probably prefer dropping to that line I've drawn previously, which we don't get. I'm going to drop for a nice small hedge here. Okay, and any fall, I'll kill that short. If we keep going, I'll take the longs. Take that off. And, I can just kill that. I can kill that. And I can kill that. And we're out for net gains again. Hardly any drawdown. That was a low-risk approach with low sizes over about 1,000 pip stretch. I think we were around here, weren't we? Something like that. 1142, which is, fairly normal for pairs like this. If it did stretch more aggressively, we would stop entering so frequently. We would keep the sizes low. We would hedge where we can. But that's a simple example. Like I said, you could have higher risk. So if you're going to say, oh, it was only $1,400, yes, but you could have had much higher risk because the drawdown was basically nothing throughout the whole thing. You never really have a dip. The only time you have any dip in equity is that, but you don't go to minus anyway. So if you just continued like that forever on multiple assets, you would have a steady wing curve. Of course, again, like I said, you could have 10 assets in there and you could make 10 times that, double the size, 30% or so. So that's really how this works. And I will see you in the next video.